before we start, are you recording this?
I am, yes.
Excellent. Thank you.
Okay, guys, you need to have your pen and pencils ready. This webinar is a discussion on how to use candlesticks and few chart patterns to trade and to enter the market, exit the market, and how to hold your trades with the help of candlesticks analysis. That's what the topic is. I'm going to mute all of you. So if there is any questions, you need to write so that I wouldn't have any interference. Okay, anybody having any issues with my voice, they straight away send me a message so exactly I stop and look into it, guys. So the topic is this: how to utilize the candlesticks analysis and few chart patterns, the basic chart patterns, to spot entries, exits out of the market, and also um, to hold your trades. If you follow the instructions that I give you within this webinar and practice it, believe me, you will have no fear when you enter a trade and exit your trade. And also in this lecture, I will also be discussing automatically the concepts of risk management and risk and reward that is included whilst you open your trades and you close your trades. So first of all, I'm going to discuss different scenarios when we enter a trade or exit a trade. There's different scenarios. Two most important things I want you to understand, uh, which I'm going to discuss. One of them is the candlesticks analysis, but then again, there's two chart patterns I want to add in to kick in to start with. So guys, first of all, I'm going to very briefly go through the candlesticks analysis, the basic candlesticks, which you need to know, and exactly how you approach your candlesticks very precisely. The reason is because everybody in this room had my lecture on that already, because this webinar is not a web lecture, this is a practicing session. So I'm going to show you the practical demonstration, but before I want to go through the concepts of the candlesticks again very briefly. Let me check something. Recording, that's fine. Candlesticks, guys, a candle is like this. This is the body of the candle. What it represents is this. What it suggests is the candle opens here and buyers push the price up, sellers push the price down, the buyers push the price up, sellers push the price down. Every candle is a representation of a fight, a battle between buyers and sellers. That is it. That is it. A fight between buyers and sellers. You need to understand every candle, not a candle on support or resistance. Every candle is a fight amongst buyers and sellers. So remember, what's happening there is this: it opens here, buyers push the price up, sellers push the price down. The buyer's intention is to take the price up, and the seller's victory is this: to push the price down. That's what the seller's victory is, to push the price down from where the market had opened, and the buyer's intention is to push the price up from where the market had opened. That is it as far as the candle is concerned. Every candle is a battle between buyers and sellers, guys. So buyers push the price up, sellers push the price down, buyers again push the price up. But that's what's happening, and that's what you see when the candle is moving, right? When it is moving up and down, well, that's what's happening. Buyers are pushing, sellers are pushing again. At the end of the period of the candle, one wins, and in this instance, the buyers push the price up, sellers push the price down, and eventually buyers close the candle here. So who win? It was buyers who were able to push the price up to this level, and it closes here. Are you guys clear with this basic concept? A candlestick represents a fight between buyers and sellers. Any questions, guys? Say yes to me. Write down. Write yes to me. I need to see the acknowledgements that you guys are with me on this. Say yes. All of you have to write yes, please. Okay. Now remember, very quickly, guys, there are three possibilities as far as the candles are concerned. Buyers win. We call them bullish candlesticks. If you heard the patterns, bullish candles, bullish candles. The second possibility will be sellers win. Bearish candles. This is the most important lecture that I'm giving you guys. Believe me, that is it. And the third option or possibility will be no one wins. Neutral candles, we say them. Now, for the retail trading purposes and for the theory purposes, the historians have given candlesticks certain names. For instance, they've given certain names to the bullish candlesticks, they've given certain names to the bearish candlesticks, and they have given certain names to the neutral candlesticks. For instance, dojis are neutral, hammer is bullish, shooting star is bearish. Now that is for like normal people's understanding, but that in reality, in essence, that is not the case. The names had been generated just for our understanding, to make it easier for us to understand. But that is not the case in essence. In 18th century, when this Japanese guys begin using the candlestick analysis to see the supply and demand within the market, believe me, he didn't have the luxury of the names. He was just using them to see the supply and demand, the force of buyers and sellers within that market, to see the strength. And he was trading successfully at that time. That was in the 18th century. Remember, these names were originated in late 20s, late 20s. But then again, believe me, guys, these are not the names. And again, these are Western names. In Japanese, the names are entirely different. Like Harami is a pregnant woman. It's a pregnant woman, Harami. Harami means a pregnant woman. So the point is this. A candlestick, the nutshell you have to take out of this is a candle represents a fight between buyers and sellers, and every candle represents a fight between buyers and sellers, and one eventually win. Buyers win, sellers win, nobody wins. Understand, guys? Any questions? Say yes. Liz. Okay, Liz.
Yes.
Okay, good, good. I need acknowledgement. Say yes or write yes when I ask for it. Okay, guys. Now moving next. Once you have a wick or a shadow, what it represents? It represents this. Let's go further. The candle opens here, buyers push the price up, sellers push the price down. At one stage, the sellers had pushed the price to these levels, but then again, what happened before the candle closes? The buyers came in and pushed the market and the price up, and eventually the candle closes around these levels. So it represents a failure on the seller's part. Remember, a failure, a significant failure. The longer the wick, the significant failure, because what was the end result? End result will be that the buyers came in and pushed the price up back to the upside. So remember, guys, wick represents the failure. Do you understand this? A body represents a strength. Whoever's win, if this body represents a strength on the buyer's part, because market opened here, buyers push the price up, and the bigger the body is, the stronger the strength of one of the participant. Understand, guys? Any questions? Say yes to me, guys. Good. Moving forward, there's a lot of candlesticks that I want you to learn eventually, yes, but at this stage, to begin your trading, I just want you to follow these certain patterns. Okay, can you guys hear me now? Can you guys hear me? Manish, okay. Timur bhai, can you hear me? Because everybody else can listen. There are no issues from my side actually. Okay, I'm gonna write down certain candlesticks patterns which are significant for you to engulfing patterns. Engulfing candle, Pin bars. Pin bars are like shooting stars or hammers. Shooting stars on resistance, hammers on support. At the end of the day, I don't care about their names. What I care is what they're representing. Understand, guys? Do you understand? Any questions? Okay, Timur bhai, can you listen me now? Can you hear me? Pin bars represents a pin. The wick is a pin. That's right. Hammer is a pin. A shooting star has a pin. Pin is the wick. That's why we call them pin bars. Yes. Those candles with the wick are called pin bars. Understand? I just said it it's connecting to audio. Okay, that's fine. I'm recording this lecture. Obviously, you can kick in at any time. Okay, guys, I'm not gonna stop on this. I'm gonna continue with the training. Anyways, any questions so far, guys, as far as the candles are concerned? Any questions? Zen, any questions? Okay. Now I'm going to discuss two chart patterns which are very important, guys. Which are very important, two chart patterns. The first of them is double bottom. Which normally we see them on support. Double bottoms, guys. I'm going to show you in a minute how the double bottom is. The double bottom is like this, guys. You have a support, right? The market came down. Forgive my hit the support, guys. It rises. And then it comes down again and make another bottom, guys. Remember, this bottom never breaches the previous bottom, and even if it breaches, it suddenly quickly comes back. And then market normally shoots up to the upside. These are reversal patterns on support and resistance. Double bottom is on support, guys. So it has one bottom and two bottoms, guys. So we call them double bottoms. Do you guys understand what double bottoms are, right? Any questions? And double tops are vice versa, exactly the same concept, it's just on the resistance. Understand, guys? So two patterns, so mark them that I've taught you already these patterns today. Double bottom, double tops. Got it, guys? Because we will be using them in our trading with candlesticks to enter the trade and exit. Got it? Any questions? Good. Now I'm going to discuss different scenarios as far as the entries are concerned. Keep on writing this, guys. It's very important. You will never have another scenario other than these scenarios. So it's pretty easy. Okay, the first situation is this. Scenario is this. Let's say this is a support. The first situation is market is coming down. I'm discussing entries, guys. So market is coming down towards the support level. It hits the support, right? We want to see the retest and a double bottom. It goes up. First of all, using a double bottom, how we should approach an entry. It goes up. So for instance, say you've got a bullish candlestick here. That is a bullish candlestick. Let's say it's engulfing pattern or a pin bar. You should not take an entry on this if you are a conservative trader. An aggressive trader may take an entry, but I wouldn't suggest this because that's not a confirmation whilst looking at a pin bar. Or say you've got another candle, you've got a bullish engulfing, you've got another candle which was a hammer, a pin bar, for instance. So two candlesticks. The question is, shall I just enter the trade? You should not enter the trade, guys. I had losses in earlier times trading euro yen when the market just ripped me to the downside. I took an entry. So I had controlled those losses by using double bottoms and double tops. It gives you confirmation. Now, guys, the market came back to test the support and establish a double bottom, right? You should not take an entry yet. You need to wait and see for another bullish candle, at least one bullish candle. So I've got another bullish candle. Now there is an entry. So you can take an entry here. Even you can take an entry here with a small stop loss. Yes, that's fine if you're an aggressive trader, but that's not an ideal scenario. The ideal scenario is this. Remember, when you take an entry, there are many factors. Time of the day, the session of the day, the last movement, the last price action. Would it be a corrective move, minor or substantial? So there are many factors, but right now we're just concerned with the price action candlesticks. So the market show you, so that is your first point of entry. You can take an entry, but be conservative as far as the trading is concerned. Let it give you more signals, more confirmation. Market went up, came down, then again you see another bullish candlestick, a reversal candlestick, which is engulfing or a pin bar. That's it. The question is, shall I take an entry? Yes, but you can take an entry by all means. This is your entry now. It had failed to breach the support, confirms the double bottom. You can take an entry. But what I'll suggest is this, guys. You knew of your trend lines, so just establish a trend line where the double bottoms, where the top of the double bottom is, guys. Just establish your trend line and wait for the price to break it and then retest. So if the price retest and you see a retest and any bullish candle here again, let's say a small bullish candle here, you want to see a retest, a small bullish candle, guys, the trade is almost confirmed. The trade is almost confirmed. Now that is a confirmed trade. That is a high probability trade to the upside. So do you guys understand what I just said? Now there are three places to take an entry. The first is a market hits the supports, you see a bullish candle, you take an entry. Normally a lot of people does it. They are in fear that they will lose exact entry. They lose a place to take an entry near the support. But that's not the right thing, because remember, you shouldn't be taking an entry straight away like this. It can just breach it to the downside. You know, this normally happens. I'm going to show you if this normally happens. 6 out of 10. Market came down, then market went up again. So you're expecting a double bottom. The market came down again. And what happened? The market stops here for a while and then it just rips you to the downside. So remember, guys, this often you'll see this, and that is where your stop loss will be trigger. You will see this. To avoid this, to be very conservative, that is your real entry. That is the best entry. Do not think that you're losing these pips, because remember, once this trade is confirmed and you are in the confirmed trade, this will go to the upside and give you substantial pips. It does not matter if your stop loss is 50 pips or 55 pips. It does not matter. Remember, the thing is, you need to be in a trade which is a high probability trade. You understand what I'm saying? Do not be greedy of having a stop loss of around 55 pips. You might be thinking, again, if you take a trade here, stop loss possibilities will be like these. Conservative, right below the trend line, because if the market fails and came back inside, this move had failed, and there is a severe possibility that the price will go to the downside. Understand, guys? But then again, there is always a possibility that the price will go inside again, can continue with the accumulation, and you might see another attempt to the upside, a break, another entry. Always a possibility. So either you can have a stop loss around these levels, or you can have a stop loss around here. But this is the best place to have a stop loss. Remember, this is the best place. Accumulation can be tricky at times. Accumulation can continue for a substantial period of time without taking a break to the upside. So normally the stop loss has to be around these levels. But again, this is the best conservative trade if you take. It already confirmed that this is likely to be a reversal. This is the second to the best. An ideal trade on the double bottom, right? Again, you'll enter a trade after a bullish candlestick, not just on the candlestick. And this is your aggressive trade right on the first. In anticipation, it will make a double bottom or straight away go to the upside again. This is more predicting. This is okay with the chart pattern. And we're going with the chart pattern double bottom again. Chart patterns fail at times, but this is confirmed. Their reasons are bullish candlesticks, double bottom, a chart patterns confirming. Thirdly, had a break of that trend line. So three reasons just on candlesticks and price action. You've got three reasons. Leave, let alone the other reasons, Fibonacci, pivots, confluences, supply and demand. Let them on the side. So do you guys understand this concept? It's very important. And I'm discussing the bullish, the buying reversal, because remember, selling is easy, buying is difficult. Remember, always remember, buying is difficult. Selling is always easy. Do you guys understand what I just said? Show you guys. Do you understand, guys? Zan, do you understand this concept? Khudaya, do you understand? Manish, you will not have another scenario, guys, on this. You will never have. This is the only scenario you'll have. Yeah, falling is easy and rising is difficult. Psychologically, it's difficult. My 60% rating is selling. 60% rating, because in human mind, it's always there. Oh, suddenly a dip to the downside. Okay. Let me discuss something further on this. The price can come back and make a triple bottom. 1, 2, 3. So the important thing is, when the price is making an accumulation, you need to note and see if this bottom is higher than this bottom. If this bottom is slightly higher than the previous bottoms. Note these things. They are very important to show you exactly that who is sort of controlling the market. Make sense? Do you understand what I'm saying? So even it's a double top or double bottom, right? Has to be double bottoms, has to be the previous bottom has to be higher than the previous. So price making a higher low, and in double tops the price should make a lower high. So this is the first top and this is the second top. So first top, and this is a double top. This is the third top. You'll see a triple top. It doesn't matter. Again, this is a double top reference, double top pattern, chart patterns. Again, note the important thing. Try and see if these tops are making lower highs. And yes, they are high, high, and then even lower than this, the previous one. Do you guys understand what I just said so far? Say yes to me, guys, so I can move. Okay, good. Taimur bhai, can you hear me now? And do you understand what I just said? Good. Let's try and find a trade. 4 hours time frame. I'm showing you the trade now. I'm not going into the time frames to see how to predict to cash the trade at this stage. That will be in my last lectures, which is confluences. At this stage, I'm just showing you the application of this. Okay, guys, this is your support now. Now the price came down, and this was your first candle, right? This is your first candle. Do you all see this? Liz, can you see this, right? Sorry, guys. Okay, that's your first candle. Liz, can you see it? Good. So that is your first candle, guys. The question is, shall I take a trade here? Do not rush into trades. Just do not rush into trades. No, this is not a significant signal yet. I want to see another one. Next candle was a bearish candle, guys. But remember, next candle was a bearish candle, but it closes above the low of the previous candle. Yes? So remember, guys, it is not a bearish candle. Again, it is a reversal pattern, but not, let alone, we don't discussing the candlesticks patterns here. We're reading the candles, it's in itself. So guys, this candle closes above the previous candle. Bulls are sort of coming into the market. Next candle closes below the previous candle. I'm a little concerned. No confirmation yet. It can, that next candle can breach to the downside. These candles does not represent a sellers are into the market or buyers are into the market. What they're suggesting is this previous move was controlled by the sellers. On these three candles, they are suggesting me this, that the sellers have stopped, or the sellers have started thinking otherwise, or something has changed from the previous move. So this is an accumulation, a neutral zone. Market is thinking again. So no indication yet who's controlling the market. But I can see maybe the buyers are sort of in, because this is your first buying candle and the price has failed to breach this. And remember, you on the support. The next candle was a little buy candle, right? It is an engulfing candle in itself. It engulfs the previous candle, but it is not suggesting by any means the buyers are in this. This is a weak holders and strong holders. Weak holders are retail traders. When the market take a break, the weak holders comes in. The correction, the retracement moves are moved by the weak holders, and strong holders move the market normally. Now guys, I'm waiting. My reference point is these candles. I'm waiting for the market to give me an indication. See what happened, guys. I've got an engulfing substantial candle. This candle represents the sell. Buyers came in, pushed the price up to this side, and it closes there. A strong buyer's victory. So the strong holders, buyers are in this. So I know that buyers are in this. Understand, guys? The question is, shall I take a trade? Absolutely not, guys. You can take a trade once. You can take a trade here if you want to. But then what I said, do not take a trade. Now I'm expecting, I want to see a double bottom, guys. On 4 hours time frame, it is better to see a double bottom. Let's wait for the double bottom. Let the price come to the downside and establish a double bottom, guys. The price start moving around and then suddenly went down. So when the price was coming down, I'm just observing, and the point is I just want to see if the price fails to break this, and I need a bullish candlestick near the support to confirm me something. So guys, I'm observing the market price. This candle represents a sort of victory, but it is not yet near. The double bottom can be around this area. It doesn't matter. It doesn't have to go there. This could be a double bottom. The price went up, come down again. You can open up your trade here on this candle. It shows a victory by the buyers. Remember, who's controlling this? The buyers are controlling this. These are weak holders. There is no substantial sellers in. All I want to see is a double bottom. The price came down and the price went up, guys. You can take an entry on this, or the price came down. These two candles, after these two candles, guys, you can take an entry on these two. This has confirmed. After this candle has confirmed, or these candles have confirmed that the double bottom has been established. That is the first bottom. That is the double bottom, guys. Remember, this is your bullish candle, a slight bullish victory, but then again the next candle closes above the low of the previous candle. So the bulls are controlling, which is where they are controlling. The question is where they are controlling, but this is where they are controlling, because remember, this candle had failed to break the low of the controlling candle, and this was the bullish controlling candle, right, guys? So if I don't want to, if I had to say that the sellers came in and they're controlling this, then the selling strength candle has to break the strength of the bullish strength candle, which was this. It has failed, and again, even if it breaches, I want to see a follow-up. Remember, that is what we want to see: a reversal candle and a follow-up, which is breaking, and the high of the reversal candle as well. So we want to see this, and this confirms a reversal candle and a follow-up. That's what I want to see. If I see this, no reverse, no strength. If I see this, yes, there is a strength. Make sense, guys? Do you understand what I just said? You need to wait for the close of the candles. You can't just decide without it. I'm discussing the close of every candle. So this is a live analysis, because remember, we are discussing each candlestick here. And when you're trading live, you decide upon each candle close. Understand, Manish? Yes, exactly. You need to wait for the follow-up candles. Yes, but on this entry, guys, this entry does not have, on an entry you don't discuss about follow-up candle. The reason is, a follow-up candle can only be which tells me the the bearish controlling this. The sellers came into the market, because obviously the bulls are controlling this right now, guys. This is your bullish. You're on the support chart pattern, double bottoms established. So if you want to see the sellers come into the market, I want to see the break of this candle. A first candle breaches, let's say around here it breaches. I won't just take an end, get out of the trade, and then I want to see the follow-up candle, guys. A follow-up candle. I want to see this candle, then I'll get out of the trade. Makes sense? Automatically it breaches the support, but then again, even if there is no support, guys, remember that what we needed to confirm, that in that market the sellers are now controlling. You understand? Everyone understand this? Everyone understand this? It is very important you guys understand what I just said. Now I'm going to show you guys. Market is coming down. Then you have a reversal candle. Sellers are controlling the market, guys, yet. Then you have another reversal candle. Sellers are controlling the market, because remember, the price had failed to break the last bullish candle, the selling candle, the bearish candle, the high. It has failed. No matter it's a spin bar, no matter it's a bullish candle, engulfing candle, I don't care. What I want to see has to break the controlling candle, the bearish controlling candle. And then I see this, guys, it breaches. That is the reversal candles, and that is the follow-up. The follow-up breaches the high of the previous candle and off its reversal candles, and that is where it confirms me to get out of the trade. The momentum has changed. Understand, guys? Yes, it has to close above the previous candle. Yes. Understand, guys? Temur bhai, do you understand? Temur bhai, do you understand? Okay. Now go back to this. So let's observe the next candle. Bullish candle closes above the previous candle. Remember, this is your controlling candle. The trade hasn't been confirmed. I'm discussing there. Okay, I've got, this is the aggressive entry. That is the less aggressive, conservative entry based on double bottoms. But then again, what you need to do is this, guys. Remember, you'll always have this, something like this. The high where it makes the double top, guys, the high, you mark this like this. Always use your trend lines, always. A reference point, just a reference. Now, if the price breaks this, it further confirms the trade. And believe me, guys, believe me, that is 9 or 90% confirmed trade. A bullish candlestick breaking it, right, guys? Let's go. This candle closing above the previous candle, bullish. This is a bearish candle. I don't mind. This bearish candle does not represent the sellers came into the market. It is just a break taken by the buyers. It has failed to break the low of the previous candle. Yes. So buyers are controlling again. This is not a follow-up. For the follow-up candle, you need to see a bearish candle, a pin bar or a bearish engulfing. Again, it closes right above, guys. It has failed to break the low of the previous bullish candlesticks, right? And then again, even if it does, I know it's a double bottom right now. So the setups fails and the sellers can take a full control of this when they breach the controlling candlesticks, which is here. So we'll stay in the trade. Next candle, bullish, closes above the previous candle. You had a break. So on this, it is even confirmed. Your trade is even confirmed. The trade is even confirmed, guys. Your trade is even confirmed. Do you understand? Do you understand, guys? It is even confirmed. So it breaks. Now I'm expecting a retest. What happens when what I said, the price breaks a level, it retests. Oh, that's normally happens. Just wait for the retest. So do not be scared if the price comes back. It is just a retest, nothing else. A retest and also a double bottom. On this support now, a double bottom, right? The price went up and came down. establish a double bottom, guys. So guys, again, this is a bullish candle. Now expect a double bottom, a retest. So do not be scared. You expecting a retest. Bearish, bearish. This is engulfing. It engulfs a previous bullish candle, but again, the sellers are not controlling, because remember, your controlling candle is this, or on this, your controlling candle is this, guys. Then you got this candlestick, which confirms the retest. The price had failed to break. It retests and shoots up, bullish controlling. This candle closes above the previous candle, closes above the previous candle. It is a reversal pattern on your candlesticks, inverted hammer. It's a reversal pattern. If you open up your books on candlesticks, it's a reversal pattern on support. You have a shooting star, inverted hammer on the support. It's a reversal pattern. Again, you've got this. The price went down, came back up again. It had failed, and it had failed on the support. It confirms the retest. I will stay in my trade. Remember, it, even if it fails, I won't get out of my trade, guys. The reason is I have this. And then again, this is my bottom line, the double bottom. Yes, the chances will be less of the success of this trade. Of course, yes, if it comes in. But should I stay within my trade? Yes, I might stay in my trade, because remember, I want to see the breach of this candle, which is a major controlling candle from where the reaction had started. The next candle closes above the previous candle. You got bulls coming into the market, engulfing again. Mark a reference, guys. All the candles I'm marking reference could be your entries. Now, whenever you have entries like this, whenever you have a move like this, always just put a reference line, just a reference line. It doesn't have to connect with anything. If it is going to be an upside move, you put a support line like this. If it's a resistance, you put a resistance line like this. Only a reference line. So I'm gonna put this reference line like this. It doesn't have to touch anything. So right now I'm just putting my reference line like this. Even when the price was here, then when it established wicks, you just adjust your reference line like this. You understand, guys? You first adjust like this, then when the price rejects, you adjust them like this. Connect with the possible points, 3 points, 2 points. It is just a reference, guys, nothing else. You can even have it like this, it's fine. I like to connect with the 2 points normally. So you have a reference. This reference line represents, as long as the price remains above this is going to be a bullish trend, and you can really nail the trend. So you need to have your reference line like this, and this also tells you where to exit the trade. Remember, if the price breaches this, you can just get out of the trade. Your stop loss can be around these areas. Now your stop loss can be around these areas. If you're conservative traders, move your stop loss. Let's say, for instance, from here to here now. You can, or here. So keep on moving your stop loss to the break-even levels. But then again, let's follow our candlesticks analysis again, guys. Continue with that. Bullish candle. This candle closes above, failed to break the low of the previous candle. This candle closes above the controlling candle. Above, bullish, 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 bullish again, bullish, 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 bullish. This is the first bearish signal. It is not even a bearish, it is bullish, 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 bullish. That is why I was saying there is no yet indication that sellers are within this. So if I sold earlier, I was wrong. There's no indication. And then, guys, remember, when you have a move like this, always what I said, mark your trend lines, support line, mark them. Yet it's a bullish market. Do not be rigid. Give them breathing space. It's fine. Now I want to see the break of this with a substantial candle to confirm, to get out of my trade. I can still stay in my trade, see if there is a more juice to the upside. There may be a possibility again. It is just bulls are taking a break and the sellers are showing something. There is no indication yet. The price, if breaches this last controlling candle, I want to see a significant break first, and then I want to see the follow-up, right, to exit the trade. But normally we exit the trade based on our target levels, and then again, you know, this is a resistance level, which is support, which is acting as a support right now. If the price breaches this, obviously I want to get out of my trade. So do you guys understand the implementation, how to analyze and utilize trend lines, candlesticks and double bottoms to take a trade, hold your trade, and have your stop loss? So at every time you can keep on moving your stop loss up, guys. Let's say the market went up around this area. Move your stop loss around here. Market went up further. Start doing accumulation. It's up to you. Move your stop loss here or here. It's up to you. So it's easy to stay within the trade for the longer period of time. So do you guys understand? Do you understand? So it is not yet a sell trade, guys. Thank you. Zan, do you understand? Liz, do you understand? Manish, Ikram, do you understand? So the thing is, never trade with fear. We cannot invest our hard-earned money with fear within the market. And market is not a casino or a gambling place where you roll the dice and then you're on the mercy of your fate. No. You trade what you see. And believe me, every candle representing a fight between buyers and sellers. And believe me, you can control your trades. I can invest 10 lots on like this. I can invest 10 lots like this, and I will be in control of my trade. Do not be in fear that it can just suddenly reverse and I'll lose this bloody 50 pips. Do not. The reason is you already have how many pips? Let's say you took a trade here. How many pips? You're already 331 pips up. So if you lose 20, if you less 25, 35 pips, it does not matter, because certainty matters. The certainty matters, right? The quality matters. Do you guys understand this? Any questions? Any questions? Tell me if you don't understand this. I'm not going to repeat this lecture again. Most significant lecture, and this will be followed by intense practice on all of you guys to mark your charts like this. This is a real-time analysis, exactly, because we are represent and doing the analysis on every candlesticks. Every candlesticks. You understand, guys? Any questions? Good. Give me a minute, guys. Hmm. 83. Oh, that's nice. Okay, now again, I'm going to show you another example of this. This is going to be a very detailed webinar. The reason is this is the most important, and I thought of giving you guys to refresh myself, because there's not much trading tonight either. There's not much trading. I've just got sell trades running on euro yen, and that is it. There's no more trading tonight because of tomorrow news. The market will move a lot, and I don't want to get stuck into trades. Let's go to US dollar yen. I'm showing you the buying examples. The reason is buying is very difficult as compared to selling. Believe me. Ask, so many traders say the same. Okay, guys, you've got the support levels marked. You obviously have your levels marked on your charts, right? Let's start again the same exercise. Market test the first bullish candle. I said the buying is always difficult than selling. Remember, the buying is always difficult than selling. The buying trades are always difficult to take than selling. Yes, remember. So you've got a bullish engulfing candle, controlling candle. Let's say we are in the trade. This is your first aggressive entry. If you want to take an entry, maybe up to you guys. You take this entry, mark your reference line like this. Just a reference line. That is it. And my stop loss, guys, I'm going to show you later the stop loss being triggered. I'm going to give you examples of that, of losing trades. This is your stop loss. Believe me, if the market fails, you are suddenly out of the market with, let's say, 50 pips. 50 pips is nothing because we are trading 4 hours time frame where an average profit taking is around 300 pips. Okay, guys, you take an entry. Okay, now I'm expecting a double bottom. That's what I want to see the double bottom, right? This is a bearish candle. Again, do not be scared. The reason is you're expecting a double bottom, a chart pattern formation. And again, this is your controlling candle. The price came in, and this is where you find a first bullish signal, guys. Again, adjust your trend lines. Remember, this is going to be the double bottom, right? Just adjust your trend line like this. Wait for a bullish candlestick. You want to wait for it? That's your bullish candlesticks. Fair enough. Guys, straight away mark your trend line. It doesn't matter how you mark it. You just need a reference. The price can make a triple. This bearish candle came. I'm in the trade now. The bearish candle. Again, I need a follow-up, which is a significant candle. This looks strong. But the point is, I want to see the breach of the controlling candles, right? It has failed, and I'm expecting another triple bottom to the upside. And again, see, this closes above, slightly higher than the previous one. Very important point. We don't notice these little things. Very important. It tells you who's controlling the market. The buyers came in, buyers up, closing above, bullish candle, breaks the trend line. It confirms. Then the bullish candlestick further confirms. Now expect a retest. You will have a normal retest normally. And again, guys, have your reference line like this. Only a reference line, not touching the wicks, just a reference line. Expect a retest, a bearish candle. Do not be scared, because remember, this is your controlling candle. That is your support levels. You need to see the break of this. And then again, this is a bullish candle. The reason is there is a rejection. Bullish. Stay in the trade. There is not a single candle suggesting me that I need to get out of my trade yet. Do you understand, guys? Do you understand this? Higher low. This is higher than the previous one. When you will get out of this trade, for instance, if around these levels, let's say if the market breaks this trend line, you get out of the trade. If you're a conservative trader, if you're aggressive trader, I'll stay within the trade, expect another move to the downside and then movement to the upside, because this is my threshold. Remember, it up to you how you trade. There is no indication yet. Then there is no indication yet that the sellers are controlling. Again, guys, when you have this, you can get in at any stage. I'm marking the entries. I'm going to show you another entry. That's your another entry. If you're not in the trade, that is your another entry, right? If you late in this trade, that's your another entry. Remember. Do you understand? That's your another entry. Yes. Stop loss. Do you understand? A reference line. What happens since? Double bottom, guys. Another double bottom on this support. Double bottom. Your reference candles are here. Any questions? Tell me, are there any questions? Do you understand exactly what I'm suggesting? 100%. Temur bhai, any questions? So you do analysis candles by candles. So do not be scared if candles makes a scary shape. Do not be scared. Wait for the candles close. Wait for the close of the candles to tell you who win it. Anybody can win it at the last time. Let me give you a selling example now. I'm gonna give you this latest selling example, guys, which I've just sold. I'm gonna show you. So you had this trend line like this. You will have your charts marked all the time, right? It depends what kind of trader you are. It depends. I strongly advise you guys, and I'm going to advise you guys in my fifth webinar, but I strongly advise you guys do not trade by taking like a vampire sucking the blood out of the market. But that's because market is ruthless. Focus on your targets, and that's what matters. Once you achieve your target, you can move your stop loss to break even. Let the market ride. What I said, there is always a point. There is always a point you can get out of the market. You'll exactly know when the trend has changed, when the sellers came into. The moment you see the sellers came into the market, get out of the trades. Take whatever you have already as far as pips are concerned. So you're not going to let the market to go all the back down to your stop losses. You know exactly where the sellers came in. That is it. Understand? But yes, I advise keep on moving your stop losses. Obviously, if you're trading on 4 hours time frame, you're not going to get this opportunity trading on smaller time frames. The reason is you didn't have that breathing space. Now guys, I had my chart marked like this. I don't use stop losses when I'm scalping, guys. I just manually trade. And I'm going to show you in a minute how to use your stop losses. You use your stop losses if you're not sitting on computers. But if you're sitting on computers, always use a stop loss, guys. It's a death warrant. Imagine you're trading without a stop loss in the evening, 6 o'clock. You had a manipulation by the European Commission of stimulus, and suddenly the euro rises almost like 90 pips. What happens if you without a stop loss and you didn't your account doesn't have enough equity? You're done, finish, dead, right? Scalping. I'm showing you here. That is exactly scalping. I'll show you my entries on 1 minute time frame, guys. Earlier I did on euro yen. Okay, guys. Now I'm going to show you the example of a selling trade. First of all, market is making lower highs. Can you see this high is lower than the previous one, and it's on the resistance. So there was the first rejection. There is another rejection, guys. Have your trend lines marked. This is also a double top, guys. These are double tops, triple tops, double tops, triple tops. Okay, these are. So first, 2, 3. You want to see the break of this trend line to confirm an entry. You want to see the break of this, guys. Break of this. I'm just going to mark a reference entry. You can go into 1 hour's time frame to take this trade, but this is your entry, guys. Simple. That is your entry around here. If you go to 1 hour time frame, that is your entry. This candle is your entry. Understand, guys? 4 hours, 1 hour, 4 hours, 1 hour. I'm suggesting for you to train on. Stay in the trade, yes. Stay in the trade, yes. Stay. These candles does not represent this buyer's controlling yet, because remember it fails to take the high of the previous controlling candle, right? Yes. So none of these candles still yet to break the high of the previous candle, so I will stay in my trade. But remember, when the movement started, I always have my reference line like this, guys, and I will adjust this reference line later when I will have wicks like this. You understand, guys? Can you see? So I want to see the break of this before I get out of my trade. Otherwise, the price continuing to the downside. So utilize your trend lines to stay in and out of the trade. Do you understand? Classic example I'm going to show you here. Bearish engulfing, right? breach of the trend line, you are in the trade, and then straight away you put a reference line, blind reference line. These candles fail to break the high of the previous controlling candle. Stay in the trade, stay in the trade. This candle failed to break the high of the, this is the follow-up candle, guys. You can exit your trade here. Yes, you can exit your trade here if you're trading. You can exit your trade here. But then you have this trend line, guys. Always and wait for another entry, let's say. But remember what I do when I mark my trend line, I do not exit my trade. I wait to see if it breaks above this trend line. Normally, this is what I do. You can exit your trade here, guys. It's fine because remember, you still have like 150 pips. Stop loss was just 35 pips. Remember, this was the first candle and that was the breakout candle. The follow-up candle breaks the previous high. Controlling candles. You see this? It is above the previous, a classic example. Get out of your trade, then see what? Another rejection, another rejection. The moment you have these rejections, you've got this trend line. You have to adjust these trend lines, adjust them to this. Now, if the price fails to break this, you take another trade. Sell, sell. So I might take a trade here on this candle. Because it fails to break, normally I wouldn't even get out of my trade, but I'm suggesting if you want to get out of your trade, never be scared if you have a correction. Remember, you put a trend line which telling you when to exit your trade, right? So you're not going to get out of your trade straight away. You're not going to have trend lines like this. It has to be like this. Let the breathing space in. But let's say you get out of your trade as per rules. Another entry, guys. Where you will exit this trade, tell me. This is where I'll exit this trade. Because the price breaks my trend line and it has retested in closing above, right? Not even on this bullish candle. On this candle, I'm happy to get out of my trade. That is it. I'm out. Adjust your trend line. Maybe on the bullish candlestick, I'm out. So that is your exit. You understand? Again, this is a double bottom, guys. Another entry to take a trade, to take a buy trade. See this. This wasn't a double bottom. A classic example. One bottom, the price came and breaches. There was no bullish candlesticks to confirm you would buy it, right? So that was missing, and that's why I say never take a trade on this. Again, you know this is a leg to the downside, so this is just a correction, but I'm giving you an example of a double bottom. It wasn't double bottom, right? But this confirms the double bottom, right? The entry has to be around this area after the break of the trend line. What I said, just mark your trend line and wait for the break of it, and then it break and establish another double bottom, right? Do not be scared. Another double bottom closing higher than the previous low, right? This is your reference line, right? Stay in your trade. Gone up, right? Where you will exit this, the question is, but that is where you'll exit your trade. It is a pretty choppy market around these areas, so but again, you know exactly where to exit your trade. I might want to stay in my trade around these areas. It's up to me, but that is where I need to exit. First bearish candle, no follow up, but this was a follow up, breached the previous controlling candle, almost breached it. Break of the trend line, exit your trade. Do you understand? But then there's other reasons. Look at this. This is a bearish channel. I'm not discussing other confluences at this stage, just telling you using just candlesticks analysis how to utilize it. But remember, when you are trading, you exactly know, then you need to get out of the trade here and sell it again. Any questions? Do you understand? Any questions anyone have? Okay, let me see more examples. I took a sell trade, for instance. Market coming down, went up again. double top, guys. You mark your reference line like this. Then markets start falling. You need to adjust your trend lines. Then the market rises. You will adjust your trend line like this. You understand? This is what I was suggesting. You can stay in this trade until the price breaks this. Because remember, when you'll have a trendy trade, the market will always zigzag like this. You can always have your entries around these areas. So you can close your trades, enter again, close your trade, enter again, or just stay in your trade. Stop loss just above, keep on moving it to the downside. Understand? Do you understand, guys? Let me give you an example on the daily time frame on this. So you can stay in this trade. You can stay in this trade as long it doesn't break these levels, right? Or you can keep entering. See, we have this move to the downside. This is my reference. I want to see the break of this to go long. Otherwise, I wouldn't even go long. I want to see the break of this to go long, right? I want to see the break of this to go short. Guys, one bottom, two bottoms, break. That is your entry. Going to the upside. Makes sense? Your reference line. So do you understand, guys, what I'm saying? One bottom, double bottom, closes above. Reference line. It confirms the trade here. That is your confirm entry. Now I'd already given you the rules of retest and entry, retest and entry. Add them. When you add them with candlesticks analysis, believe me, you will be 90% right. When you'll exit your trade, you took an entry, that is your stop loss. So remember, if this trade fails and market shoot to the upside, you will have a small loss and you will be out of the trade. And when it goes in your favor, guys, boom, like this. Understand? Any questions? Do you guys understand? Any questions? Zan, Temur Bhai, Liz, any questions? Any questions? This is significant. Manish. You can place trade on 1 hours, it doesn't matter. The application is same. Let me show you example on 1 hour's time frame. It doesn't matter. The time doesn't matter to me, to be honest. Price went up. Establish a double bottom. This is a double bottom, double tops, double bottom, double tops. Simple. This is my reference line. I've got a rejection. I want to see that this is first rejection. Let's wait for another bottom, the double top. It has failed to break. This is bearish candle controlling the market. I've got a reference line like this, right? What happened? Tell me what's happened. Would you buy? I wouldn't even buy on this. I'm not going to buy on this. None of these candles had failed to break the previous high and substantially show me the bullish strength. Should I stay in my trade? I'll stay in my trade. No reason for you to close, guys. 135 pips, 1 hour time frame. Tell me. Tell me. Where is the confirmed trade? That is where it was confirmed, the break. And there are more indications. This is head, left shoulder, right shoulder. I'm going to go through that pattern at a later stage. Right now, double bottoms, double tops. And that's what you need to focus on right now. Awais, I'm still in the lecture. I'll give you a call back. Give me a minute, guys. Euro yen is at something happens. Let's in the market. Give me a minute, guys. Let me have a look quickly what's happening. Oh, beautiful, guys. What I said, what I have been saying, that GBP will go to 1.1516, right, guys? Did I not say it? See what happened. Guys, this is my live trade and I am 611 pips up on this. Can you see it? Can you see, guys? 611 pips. What I've been saying on GBP? It will go down. It will go down. Do you see, guys? See, 836 pips. Beautiful. Classic. Classic. Beautiful, guys. I had one lot on this. I had a lot on this. Guys, give me a minute. I deserve this. It's not a new. It is not a news, guys. It is just obviously the Theresa May is going to trigger Article 50, and apparently there was an issue at the European Parliament today where one of the UK member of Parliament was injured, and guys, well, this was my best trade so far. I don't care. Honestly, I don't care. All I care is what I'm trading. 825 pips, guys. Live in front of you. 864 pips. I'm 8,000 pounds up on this right now, guys. 8,000 pounds up because I've got a trade with a lot. Yeah, I've got a reason for this. I can't tell you right now, but then again, it was there for me. Technically, I discussed this reason in my video. If you guys remember, if you watched my webinar on GBP, I said why. Let me show you guys why. I uploaded my video today, guys. If you remember the profit when it was 300 pips, and I said it is going to the downside. If you guys remember, I'm not sure if you guys remember. Can you not see this? Exactly what I did. Same principle, guys. Same principle what I'm showing you. I had no reason to close this trade. Tell me, do I have a reason to close this trade? Tell me. I'm on a monthly time frame right now. Any candlestick suggesting me that the buyers are in this market? No. Tell me. Say yes. No, it's not. It's not. Absolutely not. I wouldn't suggest to you. Don't do it. Wait for. Any candlestick suggesting? No. It's too late now. Wait for the price action to come around these levels again. So going back to our lecture again. Okay, I'm 676 pips now. Okay, that's fine. Now you guys be thinking why I didn't close my trade on 800 pips, right? I already closed 2 trades on this. I had 5 trades, guys. I've taken off 2 trades out of the market. All of those trades were with 1 lot each. So I've booked already 16,000 pounds out of it. So I'm happy with that. Let it run because I can see it is going further to the downside. Okay, guys, let's go back to our lecture. So let's say on a monthly time frame if I've took a trade. That is where I'll take a trade follow up, right? 1, 2, break off the trend line. I've got a reference line. Then there is no candle suggesting me. I think nobody was long on this. I think nobody's buying it. This is too dangerous to buy. I think all of them were selling. Position traders were selling. The swing traders were selling. I was selling. I sold it. So I don't see a reason. Now this is your first bullish candle, right, guys? You will be thinking maybe, but then again, you've got a reference line. So you can exit your trade on this. The reason is it was a follow-up, right? Bullish and the follow-up candle. But then again, this rejection means something. This rejection means if I see this rejection with this follow-up candle, I'm not happy. I want to see another candle breaking above. But then these candles failed, right? So I'll stay in my trade, and that's what I exactly did. Just give me a minute, guys. Exactly, with that what happens when these sort of things happens. It was a yeah, more than 1,000 pips move. 1400 pips. It was 1400 pips. Beautiful move to the downside. Beautiful head and shoulder, classic. Okay, guys, going back to our lecture, do not indulge yourself in this. Focus on what I'm teaching you guys. Remember, at the end of the day, what matters is pipping, profiting. Leave. The moves will take place every day, every other day. That shouldn't be a problem. So can you see this, guys? I've got no reason to close this trade. These 2 candles fail to break the controlling candle. Again, I've got a trend line. I'll keep on adjusting my trend line. And I see no reason yet to close the trade. Yet to close the trade. And that's why I'm in my trades. Can you not see? So exactly that is how you should be trading. Do you guys understand? Any questions, guys? Any questions, please? Any questions? Again, I'm going through a concept again. I'm going to show you this concept again. You need to understand. Remember, when you take a trade, use a reference line. and keep on adjust this reference line once the price making support like this. When the price start going like this, then you keep on adjusting it. You understand? And remember, break of this will invalidate your trade. Otherwise, you stay within your trade. Understand, guys? Do you understand what I said? Understand, guys? Liz, good. So that is it for the day. Now, this is the homework. I want you to do it exactly the way I want you to do it. Homework. Go on to 4 hours time frame, and that is where you'll do your homework, guys. Mark your support and resistance proper. Mark the way I described in my first lecture. Mark your trend lines. And then I want you to show me where you'll enter the trade and where you'll exit the trade. Entry box has to be different than the exit box. So if I close this trade, it has to be around these levels. So show me like this entry and exit and your stop loss. From this, you can just write down here your initial stop loss. Do not move it. Just leave it. Take out 10 trades, 10 trades, take 10 trades and show me the results at the end. So if you had a first stop loss trigger, second stop loss trigger, doesn't matter. Because remember, by the time you had like 3 winning trades, you will be in massive profits. Because remember, the stop losses are like 30, 40 pips and the profit taking is around 200 pips, 300 pips. Believe me, on 4 hours time frame, these trades will have a risk and reward ratio of 1 to 6, 1 to 7, 1 to 4, 1 to 5. So do not be afraid of a single loss. Understand, guys? So the point one is mark your support and resistance, then mark your trend lines, then look for an entry, exit, and amend your trend lines accordingly how the price action develops. Understand, guys? Utilize your candlesticks analysis to stay within this trade or exit without any fear, without any emotions, without anticipating, without thinking what happened in future. Observe, follow the price action, what they are showing to you. Understand? Let's see what happens. What is the reason of this? It's oh yeah. Liz, nothing. I was just telling them to. Okay. Oh, that what happened? Liz, we had a move on GBP of almost 1,000 pips. So that is it for this lecture. The homework is this, guys. I want to see your markups. Now remember, when you mark up one chart on 4 hours time frame, believe me, it will take you at least half an hour, 40 minutes. So take your time, because the markup has to be candle by candlestick analysis. The French president has said about the negotiations that they're not going to be easy negotiations. That's what he said. The statement was this: there must be a threat, there must be a risk, and there must be a price. Negotiations otherwise wouldn't end last. So this is a negative statement given as far as the British negotiations on Article 50 is concerned of their exit out of the European Union. So that was a statement made by the French president. Understand, guys? That's what it means. Exactly. Look, there's another statement. The French president said the UK must bear the consequences of leaving your European Union. So this is the negative effect again, guys. I want you to mark up, let's say, Australian dollar and New Zealand dollar are very interesting. Very interesting. The price always reacted and then comes back, and this is a normal practice of the price action. Remember, it will not keep on going to the downside. You'll always have, again, a candlesticks is a fight between buyers and sellers, nothing else, right? Nothing else. They have to balance the fight, nothing else. And again, market is technical, not fundamental. It moves technically it moves. I had discussed in detail in one of my videos, if you remember, where I did analysis of gold, analysis of GBP, analysis of euro US dollar. If you remember, I've explained why it's technical. I don't have time to go through it in this lecture, but they are technicals. I just use random 12, 21, 8, 21, 12, 21, 30, 50, 55, 11, 200, 150, and 365. So it depends, it varies. So that is the end of this webinar. I'm going to switch off the recording, then we can have discussion. This is the end of the webinar. Your task is to mark your charts and send it to me every day, one chart. I want to see on that single chart 10 entries, and I want to see the results, how many pips you made on those entries, regardless it is a failure or a successful trade. You have to do this. The more you practice on your charts, remember, you mark up your 100 charts like this. Believe me, 101 live trade, when you'll be trading live, you would have no fear. You'll have no fear in your trading. Make sense what I said? So I'm going to switch off the recording and we can have a discussion. Thank you very much.